If we are comparing, for example, US market to the European market, in the Europe, we have lots of different kind of already big neobanks as N26 or Revolut, which are providing a cool user experience, different kind of products. Revolut even have a cryptocurrency exchange on their own. So that's cool. And I would say that in terms of bureaucracy, Revolut is way easier comparing to some kind of Central European bank.
The Digital Banking Podcast is powered by Typhon. Typhon is the creator of Infinia, a dramatically better digital banking platform for community financial institutions, as well as several platform-agnostic, revenue-generating point solutions. Our highly configurable platform and broad ecosystem of third-party partners ensure our entire suite is scalable and extensible to meet the needs of any FI. On our podcast, you will hear host Josh Ditar discuss today's most pressing financial technology topics with seasoned industry experts from every possible discipline.
You know, your podcast hasn't officially made it until there's ads in it. But this is one you're not going to want to skip past. And, well, if you do, feel free to hit that fast forward 15 seconds button twice. Ever wonder what gives me my energy and enthusiasm during these podcasts? You know, outside of my relentless desire to learn about, connect, share, and build up community FIs and their mission to support the communities they serve? It's coffee, and lots of it. Now, you want to know what's better than your regular old coffee? How about donating $5 to the Children's Miracle Network hospitals through Credit Unions for Kids every time you purchase high-quality, ethically sourced coffee that also provides living wages to coffee farmers? So if you want to listen to this episode with epic levels of caffeine-induced focus and help kids in need, head to javaforkids.org to learn more and buy a bag or 10. Thanks. Welcome to another episode of the Digital Banking Podcast. My guest today is Donat Husjainov, the Chief Product Manager for X Data Group. Fun fact, Donat is actually the second guest I've had from the small country of Estonia. Also, a fun fact that Donat shared with me, Estonia has the highest percentage of startups per capita in the world. So I guess it goes without saying, Estonia is bringing some pretty fascinating people to the table, and Donat is certainly one of those. Donat has always been a problem solver, even from a young age. He got the first personal computer in his family when he was 7, and he quickly learned, to his dismay, that the game he wanted to play on it, he couldn't. His computer just wasn't powerful enough to run it. So rather than sulk in dismay, he set out to solve the problem on his own, tearing the whole computer apart to figure out how to make it faster and more powerful. Now, remember, this was before the days of a good old-fashioned YouTube video to watch on how to do it. Donat's fascination for IT led him in a career path in IT, but similarly, he had a powerful interest in economy and finance, which led him to spend 4 years in the Asian Chinese market researching and working there to learn how a big country with lots of people tackles banking and technology programs, and how in 2014, 2015, they were able to massively grow their economy. Coming back home to Europe, Donat worked at one of the 3 largest banks as a product manager. And what he found was an inability to move fast and innovate due to the size and speed the bank moved at, thanks to things like bureaucracy and regulation. Sound familiar, anyone? A combination of IT and banking experience in different markets, combined with a flair for design and user experience, Donat is looking for ways to solve problems that could impact millions of people. As someone who likes to be hyper-connected, he also likes to take time to hyper-disconnect in ways like, climbing over 3,500 meters in elevation in the mountains of Italy. We've got lots to cover today, from banking and consumer expectation to different markets and the impact of super apps. So without further ado, Donat, welcome to the podcast today, man.
Hi, Josh. Thank you for awesome introduction.
So I'm super curious about this fun fact that you shared with me. I had no idea. So you were talking a little bit about how Estonia has the highest percentage of startups per capita, a massive laundry list of unicorns, and some pretty cool stuff that has come out of Estonia. Why is that? Like, what is the culture of innovation and of cultivating startups like in Estonia? Like, what's the driving force behind that?
It was an interesting fact because it all started with the Skype, which was founded in Estonia and then sold to Microsoft. Afterwards, it was like first unicorn, and it appeared that Microsoft built here a big office with lots of workers, and those founders who founded Skype, they understood that Estonia is kind of good place with the talented people in terms of the IT engineers to start up more different businesses, at least for the European market. And because of that, it appeared that we have nowadays Wise, which was previously TransferWise. It's a big payment system in Europe. We have Bolt. Bolt is a big ride-hailing company. And we have Pipedrive and lots of different other companies, also like Verif, which is dealing with the AML and KYC. The list is big, actually. And that's kind of interesting. We have lots of hackathons where people just can come with their ideas and other people can solve different kind of cases on those hackathons. And those are also funded by government and by Microsoft and all the big companies all over the world. So we have good engineers here, and we have people who understand something in finances. And it just happened that we have lots of startups because of that.
Yeah, when you were saying too, something to the effect of it's really, really easy to start a company in Estonia as well and to open a bank account.
Yeah, that's true. We were one of the first, let's say, countries in Europe which gave a possibility to open a company online and to, let's say, have a lot of governmental things online. Like we can vote also like online. You do not need to be present even in the country. You just need your ID card and access to the governmental portal. And also we have e-residency, which helps different people all over the world to apply for the e-residency, get your ID card, and then you can open a company and you can even apply for the banking account in Estonia online. So everything you can do online. Yeah, of course, I think it will happen that you will need to come here maybe for some kind of KYC questions from the bank. But if we're speaking about Central Europe, it will be way harder to open a company and to open a bank account than in Estonia. And because of that, we have lots of IT companies which started here, and we have different kind of huge already startups which are becoming unicorns.
You know, I'm super curious after this podcast recording to do some research. I wonder if there's some case studies just talking about, you know, kind of how if you literally as a country cultivate innovation, like what kind of impact that has. I'm sure it's quantifiable, right? I mean, I'm sure it has had an impact to Estonia's GDP, to, you know, just the quality of life in the country. Like, I'm sure there's massive ripple effects to it, but I'm curious what the downsides are, right? Why are maybe other countries not so willing to make it so easy to create startups and to innovate? So I don't know. Now you've opened up a full new world of curiosity to me.
Actually, I was also thinking about that, and the answer here is very easy. Estonia is a small country on the post-Soviet territory, and we don't have so much resources in our earth. So we have people, and we have our minds, and we need to bring something to this world. And that's why people are studying at the universities and different kind of engineering programs in scope of the IT and also in finances. And that's why we have lots of engineers who are working, lots of them are working remotely. You are living here, but for example, working for some kind of a Central European company or for the US even company.
Yeah,
quality of living here is kind of nice. We have, let's say, good people here. We have a lot of free place to build your own house if you want, and a lot of people want to be even more in the IT sphere, and e-commerce is developed well. So it's very, let's say, if we compare Estonia to other Central European countries, for example, let's compare two capitals like Tallinn and Berlin. Berlin is bigger lots of people, and it's way harder to buy their flat for, let's say, junior engineers. And if we compare to Tallinn, in Tallinn, junior engineer can buy it, and it's more affordable. And quality of living, as I said already, is higher there, and we can easily, let's say, give a possibility to our children walk on the streets and do what they want, and we do not think that something will happen to them because like the criminal rate is very low here. So nice place for the family.
I hate to put you on the spot if you don't know the answer off the top of your head, but what's the population of Estonia? Do you know?
1.3 million, something like 1.3, 1.5, about.
I'm curious. I'm going to Google real quick. Yeah, so I live in Portland, Oregon, which is just a city in one state in the country. And if you don't even include all of the major surrounding greater metropolitan area, it's 635,000 people. So we're like half of Estonia just in Portland. Yeah. So I think the scale definitely changes things, so that kind of brings me to one of the big things that I really wanted to talk to you about, right? Which is, I thought it was fascinating. The very first time that you and I talked, you made a comment that has kind of stuck with me. And you were talking about how the European banking market is behind. And I kind of had to chuckle because I think a lot of times when you talk to folks in the US market, we think we're behind compared to Europe, right? And so it got me thinking about, like, it all depends on what the measuring stick is, right? Everything has got kind of levels and layers to this whole thing. And it depends on how you're measuring it. And it's like, I'm really, really tall if you measure me against fifth graders, right? I'm really short if you measure me against, professional basketball players. So it depends on the scale that we're using here. And so, kind of having that scale, it changes the perception. And so, when you talk about how the European market thinks it's behind, why do you think that? Like, what are you measuring the European market against? And what areas do you feel the European banking sector is behind in?
Oh, that's a very big topic and interesting one, because it happened to have experience in living in China. And as far as I was studying and a bit working there, and for 4 years. So when I came there in the year 2015, I saw that banking there, it's something interesting. It's something different from the Europe. And I was curious, like, what's the difference? Because, okay, same app, you can make payments, but then you see that you can also, like, rent a flat from the app of the bank, or you can buy a ticket for the train, or you can buy a ticket for the plane, or you can buy an insurance, or, for example, you can order food to your home. And all of those are built from the microservices, and this app is called a super app. And if we are comparing, for example, US market to the European market, in the Europe, we have lots of different kind of already big neobanks as N26 or Revolut, which are providing a cool user experience, different kind of products. Revolut even have a cryptocurrency exchange on their own. So that's cool. And I would say that in terms of bureaucracy, Revolut is way easier comparing to some kind of Central European bank. If we compare Europe then to the US, I know that in the US you have even more bureaucracy. It's harder to open a bank account. And in terms of the user experience, you're only like now or like two years already like catching Revolut and trying to make something better, because you also have different kind of cool startups. But if we compare US market and the European market to Asia, then I can easily say that we are at least like in 5 years only on the Asian market in terms of the user experience and the amount of products which we provide in the banking sphere. Because building a super app, it's kind of hard. You not only need a good platform, you need lots of engineers, you need lots of partners and partnerships, and a good SDK which you can provide to all your partners and who is able and who want to make microservices inside of your super app. So, of course, for China, it's a bit easier because they have kind of, let's say, monopoly there. It just happened that WeChat appeared and WeChat added and WeChat Pay, Weixin Xian. And they started adding different kind of services there. And after that, also they have a Alipay. So that's a huge companies which are providing different kind of payment solutions and payment products and building a super apps. And for Chinese market to build like a third or fourth such kind of big super app, it's kind of hard already nowadays because you have already two huge competitors, like how to compete. But for Europe and for the US, we still have this possibility to see like who will be the first one who will combine, let's say, Uber with some kind of banking app and with some kind of insurance company and some kind of, let's say, flight buying company, tickets buying company. So let's see how it will go.
Well, I think one of the things that plays into this too, right, is kind of what we were even talking about at the beginning of this about just the culture of Estonia, right? Is you look at the culture of, say, the US market, the European market, and the Chinese market. And they're very, very different from the cultures to, just the makeup of the people that reside there to the governments and the government structure. And I think, an example that the US definitely looks at, and we've definitely been behind in, is setting standards for different types of, I try not to overgeneralize this, but try not to just peg it onto one specific thing too. But I mean, the example is just having a standard API that's used for banking, right? And in China, it's basically dictated. They're like, this is what you will use. So it does a really great job of creating that standard, right? Because you have to use the standard. I kind of always use the joke that like, if everybody has a standard, then there is no standard, right? If you have your standard and I have my standard and my wife has her standard and, your dog walker has their standard, like none of us has a standard. We all have our thing, right? We're all unique. And so it's very, very difficult to then get our standards to all talk to each other. And so when you look at kind of how the Chinese market has approached having a standard versus how the European market did versus how the US is navigating that, I think that also poses, differences in what you will see the outcomes be, don't you think?
You're right, actually, because coming to one standard is very hard. And we can even say, if we compare US market and the European market, that we have different countries inside of the Europe, like the European Union. But you, for example, you have different states inside of the United States. And as far as I know, even in different states, you have different kind of legislation and understanding on how to provide and make different kind of bureaucratic things and documents. Same for us. Of course, we have some kind of regulations from the European Union and European Central Bank. But in addition, each European country central bank can give also some kind of additional requests to the local banks. So, but what we are coming to, I know that in Europe, we are building, let's say, one standard for all European countries in terms of how to interconnect, for example, open banking system, how to interconnect different kind of banks inside of the European Union. And that will help, for example, if you have an Estonian bank, through the open banking to connect your, let's say, bank from Finland or bank from Latvia, bank account, I mean, to your Estonian bank. And when we will come to this, then I think that it will be a huge step into the future in terms of the banking, because I think that some company will appear who will just provide a good user experience to connect different kind of banking accounts inside of their app. So, and then you will be able to use your money from different bank accounts inside of this app. So it will be already, like layer 1 and layer 2. So banks will work in their business. They will provide loans. They will take your deposits. They will work with the transactions. And this layer 1 already app, they will just show it in a good way with the nice UI, with a good user experience. I think this thing could happen at least, but we'll see.
Yeah. So I want to kind of dive deeper into what some of your thoughts and predictions are on what's going to happen to kind of traditional banking in markets like Europe and the US as some of this technology starts to unfold and to kind of consumer expectations start to change. But I want to go back to, because I think to your point, right, in terms of just the ubiquitousness of use of things like super apps and the ability to kind of seamlessly digitally transact, China is far, far ahead of the rest of us,
Yeah.
right? So maybe talk us through a little bit of that example. Like, we have no idea, how did China go from being a predominantly cash-driven economy to cashless almost seamlessly overnight, right? Maybe talk us through a little bit of that. What does it look like? And then how does it just kind of function for, the everyday person in China today?
They made a huge step, actually. I remember when I came there in the year 2015, when you want to buy some kind of, like, let's say, street food, or you want to buy some grocery, you can still like use some kind of cash. But already after 2 years in the 2017, even like some kind of street food and small shops, all of them were using a QR code. So you just needed your phone with the camera. You scan this QR code and pay with your WeChat Pay or Alipay. And that was like a huge step in 2 years, or even faster. Maybe in the 2016 they even started that. And why it was also interesting for me, because you get there, you download a WeChat app, which is a messenger. So you want to add there some kind of like friends with whom you got connected there. And then you understand that you can not only chat with them, but you can also send the money in chat. And that's in the year 2015. So, okay, nowadays, if you check Revolut, for example, yes, they also have chat, and you can also send money through this chat, but we're in the year 2024. So that was a cool thing in terms of how to connect the chat and messenger with the banking. And afterwards, they just started to building different kind of microservices on the basis of the chat and on the basis of the banking. So those microservices were built by different companies. Even like McDonald's, they had even their own small microservice, which was also connected to all this system. So from the WeChat, you just open this McDonald's app and you can see that your orders. You can order something from there. You can pay, like you click on the button pay, and they're withdrawing your money from the bank account, which is connected with your WeChat. And you do not need to use any kind of Apple Pay or Google Pay or whatever, everything through the messenger. So yeah, that was very interesting.
So I Googled quick while you were talking. So Apple Pay via text released essentially 2018. All right. So a good solid 3-4 years after it was pretty much ubiquitous in China. So what happened, Donat, to the traditional banking in China when this became the predominant way of doing transactions? Because you kind of talked about, it's not just about like logging in and checking my bank account balance and doing a transfer. It's all the things that my money and my finances are associated with. So as we went from a fairly, traditional cash-based economy with actually don't know, previous Chinese banking very well, so you'll have to keep me honest here, but right, like a more traditional banking ecosystem, like we think of it, to all of a sudden people just have these super apps that do everything. What did that do to traditional banking in China? What happened to things like cash, checks, cards, like all the things that we associate with traditional banking? What happened to those things?
Josh, the interesting thing here is that nothing happened. I mean, like, they have changed. The banks in China have changed. They understood that there is such kind of applications which are using bank cards of those classic banks. And what they have started to do in China, these classic banks, they just made a flow of registration inside of the bank and ordering a bank card and opening a bank account easier. So I don't need to spend nowadays lots of time for that. Registration process is very fast. You're getting your bank account, you're getting your card. Afterwards, you add this card to your WeChat Pay or Alipay, and you're cool. That's something common with what I was saying that layer 1 and layer 2 financial applications. So banks are nowadays more in China as layer 2, where they provide a banking, where they have banking licenses. They have a possibility to store money. They have a possibility to deposit your money. And you can make their savings. You can take loans from them. But all the fancy stuff, all the e-commerce, all the, let's say, microservice things are already going through the layer 1, and those are WeChat and Alipay apps which have fancier user interface, fancier user experience, and are more commonly used all over China. Because like you're using Messenger every day. Not all the people are using their bank accounts every day. But if you're using your Messenger every day, then why you cannot like add their bank account and check your balances? So that's the logic.
So I'm super curious. Pardon the ignorant question here, but so in an economy, so do people in China still use cards at all? Like when I go to a store and whip out a physical like debit or credit card?
I mean, yeah, you can go to the store with your physical bank card or even with the cash, and they will accept it, and everything's fine. But WeChat Pay and Alipay are more commonly used because it's way easier to scan a QR code and pay with your phone. Because you're taking your phone wherever, everywhere with yourself, but from time to time you can forget your card somewhere at home or in the car or whatever place. So because we are one more common here, NFC technology was not so commonly used in China. So they were using QR codes and they are using QR codes. And that is a big game changer because on every phone, it doesn't matter is that Android or iPhone, you can just scan and pay, and you don't need any kind of additional applications as Google Pay or Apple Pay. That's the story.
I remember my wife used to have some work trips to China. And I want to say the last one she went on was probably like late 2018, maybe 2019. And I remember her saying like she had to make sure that she had WeChat and had money loaded into there because her corporate card essentially didn't work anywhere over there. And it wasn't even like they could get cash because 98% of the places that they went wouldn't even accept the cash. They were like, nope, scan the QR code. That is how you pay us. I remember her saying the first time she went over, like that was a huge shock to her. And she was like, I'm really, really thankful that I went with, a group of folks that had been over multiple times before and kind of knew the ropes for that. But, it's just interesting as I think about is you start to get to a place where all of this transacts directly like pay by bank, right? All I have to do is scan the QR code and say, I'm authorizing a push payment from my bank account to this merchant to pay for the product that I just purchased. What's the point of the card in that, right? What's the point of issuing a card and having plastic if you get to that level? And it looks like China's getting really, really close to that level where, I don't know, maybe I'm crazy, but kind of sounds like there's no point to a card, a cash, a check, any of that, which if I think about from the US market is really fascinating because, we talk about how we still have checks. I can still pay someone with a check. It is the silliest technology. Like it's not even technology. Like it is the silliest thing ever that I can and still do pay people with a check, right? But really the only reason that checks still exist is because we let people use them, right? And we haven't necessarily given people a more ubiquitous tool that works as well to accomplish the same thing, right? If you think about, okay, what if I don't have a smartphone? Granted, I'd be curious to see what the statistic is here in the US anymore of how many people don't. I mean, I bet it's getting pretty crazy. But let's say I don't have a smartphone, right? So how do I make a payment? And so maybe a check needs to be accepted in that sense. But I think there's also a part of it of just going back to the culture side of things. Like, I think Americans really want their cake and eat it too, right? And it's like, no, you let me pay with checks before. So I may only do that once every 16 years. But when I do, you better keep that for me because I better still have that. You know what I mean?
Yeah.
And so there's almost a fear from traditional institutions and everything like, oh, we can't take checks away from people. They'd be so mad. I'm curious what happened in China when you started to cross that line where, like what my wife experienced. They're like, no, sorry, we don't accept cash. We don't accept cards. We don't accept checks. You will scan our QR code and you will pay. Right. When they crossed over to that, I wonder how many people were like, I hate this. This is stupid. And then how long it took before they were over it and were like, fine, this is just how we operate now. And it just is what it is.
It's a bit working in another way in China. Because during those time when China was producing lots of different kind of new phones and of course Android phones, because that was a growing economy, rapidly growing. Of course, they're still growing, but it was rapidly growing. During this time, every person had already at least an Android phone there. And all the technologies which came there, they were learning it and they started using it. That's a cultural Chinese thing, that they're watching how everything is working all over the world. They can copy it, but not just copy it. They're implementing it in a way that it's better to use. It has better design for themselves. It has better experience. And that's why they're producing lots of things which we are nowadays using.
That's another thing that you had talked about the last time you and I talked was the user experience side of things, right? And how each of these different markets and cultures have different expectations for what good user experience is, right? And if you took the best user experience in China and gave it to Europeans, they'd be like, this sucks. And if you took the best of European user experience and took it to the Chinese market, they'd be like, this sucks, right?
That's true, yeah.
And so, especially thinking about the Chinese market, right? I mean, you're talking about, one of the largest populations in the world. How do you make a user experience that, prevailing amount of people align to and say this is good user experience, especially when you're talking about they may be able to function 80+% of their lives and probably high 90 percentile of their financial lives from one of two apps. That's mind blowing to us here in the US, right? I mean, we get upset when Gmail just changes the color of one button from blue to light blue, right? So how does that look in the kind of Asian markets?
So Asian market, as I told already, they're quick changers. So if you're providing them something new, something well designed for their market, of course, then they will not start saying anything about it. They just learn it and start using it, and that's very interesting. They are all time learners, and that's their cultural thing. And if we're speaking about, for example, same design thing, user experience and user interfaces are way different. We can compare, let's say, European and the US market, and we can make an application which will be used on both markets, and both markets will like it. Adding some small user experience things which are, let's say, specific for the markets in terms of payments or whatever. But if we compare those two markets with the Asian markets, that's total different thing. For example, if you're getting to some web page or application page, and there is no different kind of hundreds of buttons and different kind of texts with the information, then Chinese people will not like it, because what do they like? They like when you have one screen and lots of important information is already on this one screen. They don't like a lot of clickings inside of the application and inside of the web. So as much of information as you can put inside of the one screen, put it inside and everything will like it. If we compare to the European and the US market, then no, you need a smooth design. You need to have a separated buttons. You need that your text is aligned with the left side or with the right side or centered or whatever. You cannot put several sentences on one half of the screen. You should put hyperlinkage where you click and then you read some terms and conditions, because if you will put all of this inside of the one page, the majority of people will not start using it and will not like it on our markets. But for Chinese market, if you open, for example, some kind of the newspaper website, that's a very strange thing for us, because you will see lots of different kind of pictures, lots of text, everything is written in Chinese, and you can only you can spend lots of hours just on reading what is on one page. And if you click inside, then you will see also like a huge text. But if we compare with our user experience in Europe and the US, then we are trying to make it more native in terms of we're not trying to write everything. We are trying to provide the people their own understanding of what they see on the screen. Let's say it in such a way. It's like when you open some kind of application and you already see that there is some kind of icon, and under icon is written some balance, then you don't need to write the word balance. You already understand, okay, I have like $10,000 on this account, and which is written under icon, so I understand it. If we're speaking about the Chinese market, you should write more. They prefer when a lot of things are described and written with text. That's a difference.
That's interesting. And especially when you're talking about, so thinking about like the WeChat app, I almost feel like if you took something like that to a US market, for example, right, you're going to start to see people get stressed out. You're going to start to see, people having anxiety around the interaction with that because there's so many things to do, so much text. So what do you think of kind of the super app in a European or US market? Does that, based on just our cultural expectations of user experience, do you think that's ever even going to be a thing?
I think that super apps will come. And if we're speaking, for example, about the US market, then such big companies as Apple and Facebook, Meta, they will come with some solution. They're already like building an ecosystem between their products, and they just need to sum up all the products inside of the one app and make it with a good user experience and good user design. I know that that's hard. I know that, for example, if we're speaking about the Amazon or eBay, it's even hard for them to change one button on their interface because like they have hundreds of metrics about how frequently people click on this side of the button or another side of the button. And if you will change location of this button and, for example, your sales will decrease, then a product manager who have made this decision, he will got fired. And because of that, product managers in States and in Europe, they're a bit afraid about making a huge changes. But I think that it's coming with the different generations than when, let's say, younger generation, which is currently using different kind of modern fintech apps. They have, like, for example, in Europe, they can have already some kind of Revolut plus, I don't know, they like using Instagram stories, YouTube Reels, and TikToks, and also playing some, say, Roblox. They have already huge another user experience comparing to even me and you have nowadays. And that's very important for the product managers and, of course, chief product managers to understand where the market is going to make these apps and super apps already acceptable for different generations. You cannot make it too fancy on the level of the TikTok, but at the same time, you cannot make it, let's say, in a way how banks are building it. So you need to make something between. Then you will be able to work with a different audience. And I think, like, my answer on your question is, will we have the super apps? And I think yes, we will have them. The only question here is how they will work and how this microservice and linkage between different apps will work in our world, say.
Yeah, that's a good point you bring up, Donat, in that, especially as we add like the generational element, and especially looking at the current generations that are alive today, right? Because there's one major moment in time that exists in kind of the current generations that are alive today that is very different than any other moment in time And that's, the advent of the internet. Right. And so we have people alive today that, grew up with zero internet, and people alive today that grew up with 100% of their life with the internet.
Yeah.
Right. And then people with the in between. And so as you start to think about that there's different expectations even within those groups. And I will argue that, if you do a great job of user experience, it's not like you need something, truly tailored to somebody that's 90 and somebody that's 10 and somebody that's right. I mean, my 3-year-old barely gets to use any technology, right, wrong, or indifferent. We've just decided to be those parents. Like, he doesn't have an iPad or any of that stuff. And literally just the other day, I let him watch some video that we took on my laptop. And it took him literally never touching a laptop in his life. Took him all of about 10 seconds to understand how to use the trackpad for my Apple and click play on the video. I mean, just figured it out, right? So I argue that, he could figure that out. So could, my grandma. So there are certain things that are just going to span generations. But at the same time, there is a change in kind of how people are leveraging technology from the younger demographics and what some of their expectations are. And, before we started recording, you like literally 10 seconds before we started recording, Danette drops this on me. I was like, oh yeah, that's great. Let's talk about that. Of just if you're a product manager at a financial institution and you're not on TikTok and Instagram and Facebook and all of these different social media platforms, you're not doing your job.
Yeah.
You really need to be understanding, okay, what are the things that people are using that are influencing their expectations? Because let's be honest, right? Whether you like it or not, whether the government wants to ban it or not, it doesn't matter. Kids are on TikTok, right?
Yeah.
And so if you don't understand what TikTok is teaching our kids about how to navigate around, then you're missing a major piece of the puzzle, because they are using TikTok way more than they're using your banking app, right?
Exactly. Yeah.
And
It's
so
like
for us to think that we're going to influence their user experience expectations of TikTok because of our banking app, like, we're crazy. It's going to be the other way around, right?
Yeah.
So you've got to understand, if you want to try to attract younger demographics, you do have to at least understand, okay, maybe I'm not building a dedicated banking app for them, but how do I take my banking app and, understand the concepts of user experience and how people navigate around and what the culture of, technology utilization is, and apply that to your solution, then yeah, you're going to miss the mark.
Yeah, I fully agree with that. That's exactly what I was speaking about, because from time to time, I meet such kind of product managers who have like a good experience in terms of competitor analysis of the banks in the Central Europe, or let's say in the States, but they have no idea how stories in Instagram work. And afterwards, I ask them, okay, but how you want to interact with your, let's say, users inside of your banking app in terms of some kind of advertisement of your banking products? And the answer is like, oh, we can add a banner. Or we can add some kind of like advertisement inside of like, let's say, accounts, or like in somewhere in the menu. And then I'm just getting shocked, because I understand, okay, those people are building applications where I see banners, which I hate. It's like, frankly speaking, nowadays you have lots of other possibilities on how to sell and how to advertise products inside of your app. You can just, for example, if you want to make some kind of advertisement and, for example, to provide some news, you can just add some kind of stories inside your application. And first of all, you're providing to your client some useful information in terms of the finances, let's say how to save money. You're educating them. And on the second part, your second story could be like, we can save your money with such fee and such percentage, and you can apply for that. And that's already native. You don't have any kind of banner. You have just a good advertisement inside of stories, which people like. So that's the case study which some product managers need to do and to implement, I think.
That that leads to another point of, just thinking about maybe it's not even, going straight to super app, but what are
Mhm.
the things that align to what people are looking for that could and should be a part of the experience they gain from you? And I wholeheartedly agree. I think, financial literacy education and tools is a really missed opportunity, especially here in the US, which I find kind of funny. And I only say funny because I don't want to say depressing, because that's what I really want to say, because that's such a missed opportunity on both sides of the coin, right? One, if we're making people more, financially sound, successful, healthy, that's great. Like that's a
Exactly.
really big value add that we have brought to those people's lives. But at the
Yeah.
same time, if I make Donat rich, his deposits, his accounts, his things are going to be with me, and my deposits go up. But it's a win-win, right?
Yeah, that's the point. And how I see that, like, we are living in such kind of era where we have lots of different kind of apps. We have different kind of fintechs. We have different kind of neobanks. We can download those apps. We can install them, quickly register it, and deposit some amount from your bank account to those apps. And with the same speed, we can withdraw this money from this app to another application. So how to catch your customers inside of your app? You should provide them some additional value. You cannot just like make good payments or put a zero fee or whatever, like others are also doing that. You should catch them somehow, and I think that financial education inside of the application is a good point how you can catch them and how you can work with your clients. For example, you see that you have, let's say, people with some kind of good savings accounts, but they are not investing those money. So you can provide them some information, and not the text one that invest your money and earn such kind of like percentage on your, let's say, investment. No, it should be somehow introduced in the scope of, let's say, a short story that some, let's say, young guy who was investing money during his 3 years can right now go like somewhere to travel or climb or whatever. And in this scope, you can provide some people's story, first of all, and on the other hand, to provide some, let's say, options on what people can do with their money, and a bit teach them on where to invest, how to do that, through which platform inside of your application, and what they can gain in returns. So if you will be able to do that, they will start investing money. And when the person already invested some money inside of your platform, then it's way harder for this person to switch an application. Then this person needs to sell their invested money, like sell their, let's say, stocks, get money back, then withdraw them. And there is already a lot of steps to do that. But if you're just like holding your money in the balance of the application, then that's very easy. You can withdraw it to another application and delete the previous one, and that's it.
Yeah, being able to move money around different applications is, I think, a big part of that too, right? And I think that's one of the reasons why, I don't know, in some regards, I think maybe that whole super app methodology seems to make a lot of sense. Is, yeah, I mean, think about it in your own personal life, right? Like, money is money. It just, I need to transact it to do a bunch of different things. And it kind of almost artificially lives in all these different silos, and sometimes can be very hard to move around those silos. And as those walls start to get broken down, that's going to change the landscape significantly. And, you've kind of talked about some of the examples of some of the fintechs and the neobanks. Obviously, they're coming in, and a lot of times they're focused on a very specific niche, right? Whether it's a certain type of product that they offer, a certain type of market that they go after, right? They focus very, very heavily on customer acquisition, customer onboarding, and then user experience. And they do those things very, very well. They come in very heavily funded. And a lot of times they come in from a different avenue than traditional banking. So some of the barriers that traditional banking face in things like regulation, compliance, don't necessarily apply. let's park that to the side, because I think that's also probably going to start to change, right? Like as these people start to do more traditional banking things, what they are going to find is they're going to need a traditional banking license. And oh snap, now all of a
Yeah.
sudden you've got the same regulation slowing you down that is the banks, and you lose some of that competitive edge. That's neither here nor there. But, you were kind of talking about how they're able to scale really quickly, able to provide really amazing user experiences, and they're able to capture market share away from the traditional financial institutions. And then you look at some of the like European models in like N26 and Revolut. What has made them so successful?
I think that those companies, when they started, they had a motto that there is nothing what can stop us, and there is nothing which can stop us from building a good products, even like law or different kind of jurisdictional questions. Because if we're speaking about the Revolut, for example, they started with the payment license as far as I remember, and right now they have already banking licenses in some countries. So they're going also and growing rapidly. And what they do not like when some compliance people are saying that we cannot do that, because what I'm also like doing in my life, there is nothing that we cannot do. The only question is how to do that in a way that product is good, user experience is good, user interface is good, and at the same time everything is like up to law and up to date in terms of let's say some bureaucracy things. And if we're speaking about banking, we can do that. Another question is, do the people who are working in some departments really want to work and really want to invest their time into understanding on how the competitors are doing the same business in the same field with the same products, but way better than some kind of usual classical bank. And no offense to the banks, I can understand that they're huge, they have lots of people working there, and people are from different generation with different education and with different, let's say, experience, because maybe they have tried, let's say, 5 or 6 years ago already to develop some good product, and during those time the law was another, and you was not able to bring them to the world. But maybe something has changed a year ago, but you still think that nothing has changed. So you need always, you need to be up to date all the time, because if you miss something, then competitor will just use this possibility and build product faster than you have built it. So it's all about current, let's say, way of working and way of learning, that even if it doesn't matter where you work. If you work in the IT or in the finances, you should know like what is the latest, let's say, technologies, what are the latest possibilities for different products, and what are the latest cool applications which are used by different people all over the world. Even if it's not a banking application, you should know about all those things, and then you will be able to build a good product. That's my point of view.
As people kind of start to think about what happens as some of these different barriers get broken down that we were kind of just talking about, what do you think some of the potential end state is for the ways in which traditional financial institutions can and maybe have to be able to innovate? And I'll give you an example that you may or may not be aware of, but you think about like a very specific product that's fundamental to a traditional financial institution's ability to do digital services here in the US is digital banking, right? But for them, digital banking is such a big part of their institution, right? Is, for lack of a better word, is the face of their brand anymore, because more people interact with that than their traditional branches, their call centers, and everything else combined, right? So it's really important. So they're not going to just, and the vast majority of community financial institutions are never going to build this themselves internally, right? So they're going to have to partner with somebody. So because that partnership is so incredibly important, this is not something they're just going to decide, like they're all going to be sitting around the dinner table and be like, you know what, we should change digital banking and we should go with these guys. Let's go ahead and, let's get that project going. This is going to be we find on average about a year-long project for them just to identify who they're going to have as a partner.
Yeah.
And then because of the complexities of legacy technology, the complexity of just the product, right? Because there's so many different things that go into it, from decisions you have to make about UI to branding to integrations to feature functionalities to all the compliance and regulation that we talked about, you name it, like the list goes on and on and on.
Yeah.
It takes them about another year just to implement it, right? So from the point where you're like, we should change digital banking to the moment it's live is probably 2 years, right?
Yeah.
And then
Yeah,
you just
that's
went
true.
through this massive project. It took you forever to decide, took you forever to implement.
Yeah.
Let's say day one, you're like, oh, you know what? This thing kind of sucks. We want a different one, right?
Yep.
You're another 2 years away from having a different one. And at the same time, you probably don't even want to do that even if it sucks, because you probably just went through a huge backlash from your account holders from the change the first time. So you're like, whoa, we gotta let that one settle. We've also got to let our internal teams like go take vacation again because they haven't really had it in the last 2 years through this whole project. We just burnt a bunch of people out on this. So let's give it at least a year, 2 years, then we'll do this process all over again, right? So, I mean, it means your innovation cycle for something like that is like half a decade. And if you think about the pace of technology and what happens in technology outside of banking in 5 years, it's mind-blowing, right? Like think about ChatGPT today versus ChatGPT 5 years ago.
Yeah, two
Right?
different
Like,
things.
it seems almost alien. It's so otherworldly, right? And so
Yeah.
for the banking industry, like that pace of innovation is very askew from the outside. And I'm not saying that we're a unique industry and that there aren't other industries that are facing similar challenges, but we're getting to a point where consumers also don't know and don't care. They don't know that you have this big, lethargic core banking platform that you have to deal with to get around, or they don't know that you maybe have a digital banking partner that is no longer providing, high touch service for you and moving quickly to bring out deployments. They don't know any of that. They just know, hey, somebody else has this feature, you don't. So sorry, right?
Yeah.
And you kind of mentioned earlier too, like we're getting to that point where just I have, a basis point lower rate than the guy next door. That's not really the differentiator anymore. And at the same time, financial institutions specifically here in the US are facing a massive, massive margin squeeze, right? And just really the rate market has, just changed so dramatically over the last couple of years that financial institutions are really kind of struggling to find ways to really be operationally efficient and profitable in this new rate market. And so, yeah, they can't just be like, oh, hey, we need a few extra deposits. Let's just offer a whole nother % higher on CDs than all of our competition. That'll help drive up some deposits real quick. They can't afford to do that, right? And so how do you kind of navigate all of those things of saying, hey, we have all of these challenges and how we have to kind of differentiate ourselves? Our, expectation from consumers is higher than it's ever been. And we've got these challengers that are saying, hey, you know what? I'm not going to try and take on the whole breadth of, financial services in the sense of what you provide. I'm just going to do one thing. I'm going to do it really, really well. And that's what I'm going to focus on. Like, what do you think? Sorry, that was a very long way of getting kind of back to my question, which is, what do you think the potential kind of end state of that is as some of those technology barriers get broken down? And maybe it actually does get to a point where, a community financial institution in the US can say, hey, you know what? We're actually going to integrate to a bunch of other things and create our own kind of mini super app where we can do a lot more. Or maybe we can even do things like change out our core banking or digital banking platform in a week. What do you think that would have as far as impacts on, financial services, kind of given your experience in like the Chinese and European markets?
Yeah, Josh, I can give you such kind of story that I know that some European, US big traditional banks, what they also have tried to make some fancy application web for their customers, but it was not so good at the end because, as you said, like 1 year just for planning, 2 years for some kind of development. After 3-4 years, you launch, and it's not the thing which you want to have nowadays already. And so what they have done, some of them are buying some cool startups, which are building some products in the fintech. So they're buying them and they're giving their finances and giving possibilities to develop a new brand actually. But those startups are already financed by big traditional banks. That's one way how they have solved this problem. Another way, some of the banks, they have registered just, let's say, another company, which they name, let's say, Bank X. And this bank, this another company, is made of some top specialists from the bank, plus some cool modern engineers who are trying to build everything from scratch without depending on the old core which they have in their traditional bank and without all the old teams which they have in their traditional bank. So they're just building everything from scratch. And I know that in some cases there are success stories. So that is also like a possibility. Some other banks, they understand that they should start, let's say, eating elephant part by part. So what does it mean? They understand that all the things are coming from the core. So we should update core first of all. And I know that one UK bank, they have just invested lots of money, which they have really, into an IT company, which built them a new core. And now they're even selling this core, and this core is super cool. And a lot of different fintechs all over Europe are using this one. And so they found out even a possibility not only earn on their own current clients, but also to earn on all other clients who are using a different kind of European fintechs all over the Europe and UK, just providing for those new neobanks their own core. And so just imagine like all the people who are using, let's say, new neobank in the Europe, they do not know, but beneath that there is a core which was invested and built by a big traditional bank. And in the reality, all the money which you invest or like put on your balance and let's say pay some fees inside of this neobank, at least small part of this money are going to pay for this license of the core. So what I'm trying to say that if you're a traditional bank and you really have money to invest, then you should try different kind of options on what to do. But there also are different options on what you can do and how to build some kind of solution. Of course, I have mentioned like some kind of success stories. I'm kind of sure that there are some bad stories when some good traditional bank have bought some kind of startup, but happy path haven't like came on this in terms of like application or web platform, and they nowadays they do not know what to do. So that all depends on the team. I think that nowadays, while you're making some kind of investment in the fintechs or in the core banking systems, you're first of all investing not into the product, but you're investing into the team who is developing that. Because like if they have already understood on what market wants and they have understood how to build a good fintech products, then it's already a huge step. And the majority of such kind of startups, they just need some kind of financing to leave, because like there is lots of competitors nowadays, and to compete and to get and acquire more customers is getting harder and harder. But still, there are different kind of options for the traditional banks. And you also asked about different kind of markets. I would say that I think that even in China, could happen that some kind of super app in some kind of another way will appear. Maybe not now, maybe in 5 years, because our technologies are like innovating very quickly and rapidly. And who knows, maybe in 5 years we'll start opening some kind of bank accounts in the virtual reality. Okay, maybe not in 5 years, but in 7 or 10 or 15. Like, who knows? And during each technological, let's say, rapid growth, there is always a possibility to jump in and to build some kind of new way of, let's say, user experience for your customers, and then they will start using your application or web or whatever it will be in the future. So there is always a possibility for something. I think so.
Yeah, I think that's a really great statement. Like, there's always a possibility for something. And I think this is such a simple concept, right? And I never went to like Harvard Business School, but I bet you this is in like class number 1, right? If
Yeah.
there's a business that's making money, somebody wants to disrupt it,
Yeah.
right? And the challenge is just, what will it take to disrupt that? Does whatever technology, the ecosystem, regulation, does it allow for disruption of that at this moment, or does it need to be later, right? What will the investment take to disrupt that? What's the ROI of disrupting that?
Yeah.
But if there's a business that's making a lot of money, somebody's looking at, can I do that too? And can I do it better or different, right? And so banking is absolutely not out of the question for that.
Yeah.
Now, definitely for good reasons and sometimes bad, there are things like regulation and compliance that do make it harder to, just come in and completely disintermediate that whole ecosystem. But at the same time, there's lots of areas of financial services that are incredibly lucrative. So yeah, we're naive to think that people aren't looking around and going, oh, how could I disrupt that? That's interesting, right? And so I think it's also kind of interesting to me that we still come across financial institutions that don't believe in investing in technology, right? And you were kind of touching on this a second ago, like, you have to invest in this stuff. I'm sorry. Like, maybe I will say an unpopular statement, but this is not a zero-sum game. Like, if you're just trying to find the cheapest products and the cheapest partners and trying to get everything as cheap as possible, you are stifling innovation, right? And especially in technology, not saying we're going to set aside a significant chunk of our budget to invest in technology is going to cost you. It is going to cost you in terms of your ability to attract and retain account holders, because technology is the number one way we interact with our finances anymore, right? It is no longer, yes, don't get me wrong. And I'll be the first one to tell you, right? Like, I sell technology to financial institutions. I love branches. I love the physical side of banking. I think it's incredibly important. I think it's foundational to the differentiation that we have against some of the fintechs, right? And having deep relationships with our consumers. But even that being said, and even as much of the proponent of that I am, you have to recognize that the number one interaction point is going to be digital. Like, from this point forward, it just is. So if you're not investing in it, consumers are going to look elsewhere because others are, right? So we have to be putting a focus on understanding what are consumers' user experience expectations. What are the products and services that they're really looking for out of you? How do you differentiate in that? And then, yeah, I get it. Like, it's like anything else, right? It's like a household budget. I mean, I have to figure out how much money do I have and where are the areas that I need to apply it, right? But if we're looking at our budget of a financial institution, technology needs to be a really big bucket of that today.
Yeah, I fully agree with that. And while you was talking, I just thought that nowadays, I think that, of course, traditional banks, they feel themselves like, we are a bank, we have lots of clients, we have lots of money, we are investing in different projects, but reality is that they will gain even more and their returns on investments will be higher if they will understand that if they become IT first companies, then they will be able to earn more because they will get the tools for doing that. For example, they can build different kind of applications for their employees to make different kind of calculations and different kind of investments. They can work a lot with their clients to understand their patterns on what their clients like, what their clients do not like. Because there is a lot of fintechs who are going to the private banking, but what about the corporate banking? What about the corporate products? And there is always a huge field where you can find some niche to be good at, and you will still have your own clients, and you will gain lots of money on those clients because you're cool in the specific field, in the specific niche, and no one, like lots of companies or private person will come and register their accounts, and they will be using your bank account. Okay, maybe you will not have a good loans there. Maybe another bank is good in private loans. Then this customer will take loan in another bank. But for example, their corporate account will be registered in your bank because your services are better. That's exactly like about how you feel yourself in terms of the banking sector. What do you like more? And think like a lot of, let's say, big banks are saying that we are IT first. We are investing lots of money in the IT departments. The problem is that it's not only about the money, it's about the feeling of these engineers and product managers and designers who are coming to this bank. Because if they struggle with all the regulations inside of the bank, if they struggle with all the processes, if as a bank you are not implementing better processes for a better development, for a better, let's say, going to the production for your developed product, then what does it mean? It means that, okay, you will acquire a good engineer, pay him a good salary, but at the end, this engineer will go to another company who will provide him maybe the same or even like lower salary, but they will have less problems there in terms of the processes. So that's the point which a lot of different not only banks, but a lot of big companies don't understand.
Dude, so true. I mean, I'm gonna preface this statement with, I don't think that there's, no good people in technology at community financial institutions, right? And I'm not saying that there aren't, great examples out there. But at the same time, I mean, look, we are a technology company, and we still struggle a lot of times to hire exceptional talent. Salary expectations are really, really high. Culture expectations are really, really high, right? You want a top tier developer, right? And maybe they live in the Bay Area still. They haven't migrated out because of the, work from remote. And, they have a 1,200 square foot house in San Francisco and a $3 million mortgage on that thing. Their salary expectations are really freaking high, right?
Yep.
And on top of that, they're like, hey, look, I can go work at Google and Apple and Facebook and all of these places. And I'm going to have this really cool culture of innovation, and I'm going to bring really fun ideas to the table, and they're going to get explored, and I'm going to get to build those things, and I'm getting paid a lot of money to do it. Like, that sounds pretty awesome. And then if we're, a community financial institution, we're like, hey, I'd like to pay you a tenth of it. And then on top of it, I'd like to take all the good ideas that you have, and I'd like to stifle them with bureaucracy, with policies, with, process and with regulation, and you're never going to get to do any of them, right? That person's gonna be like, yeah, no, I'm good. I'm gonna go somewhere else, right? Again, please don't hear me. I'm not saying that there aren't amazing tech talent at community financial institutions and that there's not, community financial institutions that are doing this right and attracting that talent. But I mean, let's be honest, the high percentage is on the other side of it, right?
Yeah.
And it's just because that's also not what they are, right? Like you were saying, I mean, they need to be tech forward. They need to be kind of tech companies, but they also just need to be financial institutions, right? And we also have to understand that a certain, size, demographic, and makeup of a financial institution is not going to be a tech company. They're not going to be big enough to bring in a bunch of resources. Yes, if you ask Bank of America, like, they will say, we're not a bank, we're a technology company, right? A $200 million in asset size credit union in Oklahoma is not going to be able to say, oh, we're a tech company that also happens to be a credit union, right? We're a credit union and we leverage technology. So then you're finding yourself in the space of having to partner. And that's where I say, then again, it comes back to like to your point, you have to have almost the philosophical culture of the financial institution to understand, hey, we're not a tech company. We may not be, even trying to attract internal top tier tech talent, but we're going to have an open mind and a spirit of innovation around technology at our organization. And we're going to work to implement it through finding the right partners to be able to do that for us. And to the best of our ability, we're going to put, a budget towards being able to do that. That is, to your point, like that's a philosophical, cultural decision, even more so than it is like a tangible, like we're going to hire a developer.
Yeah. Yeah.
Danette, this has been an absolutely fascinating conversation. And it's really cool to hear about, like we kind of started this with, like, right? Like everything is relative. And it depends on what you're looking at, comparing one thing to another thing, whether, how it stacks up. And so it was really fascinating to kind of hear from you a little bit about, the different Asian markets, European markets, how you see the US market. Before I let you go, I have 2 final questions for you. For starters, where do you go to get information about what's happening in the banking industry?
Oh, that's a let's say big also question. First of all, as far as we are building also a financial products, I'm always making or getting a competitor analysis. I know like what our competitors in terms of private banking, corporate banking all over the world, especially European and US market are doing, and Chinese market I'm checking by myself. So that's first way of getting some information. Second way, I'm all the time checking new startups which appear in Europe and US in terms of the finances. Because, for example, you can have some understanding of the product, how it's working, and another cool startup appears, which just like totally start the same product with another idea and with another understanding of how to work with it. So that's why it's let's say TechCrunch and Crunchbase helps a lot to find such kind of startups. And also I'm watching all other apps which are in the top list of App Store and Google Store to understand what is nowadays important for the people, for different generation. Because I should know how the social media is working in different countries, which apps are popular in different countries. For example, while I'm traveling to, let's say, Central Europe or to Germany, to Italy, to, let's say, Spain, they have their own apps for different usual cases like parking a car somewhere. But user experience is different. And you can compare. You can understand that maybe they even want to get a better user experience, but they do not know that there are other applications in another country which are working better. And this comparison helps me a lot. While I'm traveling, I'm downloading different apps in different countries to understand how they're working. I'm just curious, and I'm interested in different cases. I think that's my own point, that I like different kind of case studies. It just happened that, for example, while I was studying, I was taking part in the different McKinsey competitions just to solve some kind of business cases in different, let's say, aspects and in different environments. So I liked financial cases where you needed to come up with some kind of new product in the scope of old environment. And that helped me, because nowadays I'm frequently reading Harvard Business Reviews, for example, because that's a lot of information, very useful information in terms of different kind of patterns, what people all over the world use, how they feel, how they click in different kind of applications, different rates, different metrics. Based on these metrics, you can already understand on how you want to build your own product. So I wanted to make it shorter, but That was a big answer, I think.
No, that was a fascinating answer. I think that tells me a lot about why and how you answered questions and, talk about things the way you did today. So if people want to connect with you and maybe talk a little bit more with you about some of the stuff that you've done, the research that you've done, the experiences that you've had, and if they want to learn a little bit more about X Data Group, how can they do that?
They can easily find me on the LinkedIn by browsing my name. They can write me in the messages. I'm usually replying. And for example, if some kind of product managers have their own cases, for example, not only in the financial sector, and they're interested just to discuss maybe, I'm open. Just let me know, write me. Let's find some time. Because I like solving some kind of hard cases, and I think that I'm kind of good at it. So I'm open for all the people who are interested in contacting me and speaking.
Awesome. And if they want to learn more about your company, how do they do that?
We have our website. So you can go to xdatagroup.io, and you can also find the website in my LinkedIn. So there is lots of information what we are doing, who we are, and how to contact with us.
Awesome. Well, hey, thanks for coming and being a guest on the Digital Banking Podcast, and that appreciate it.
Yeah. Thank you, Josh. That was a nice podcast.
Thank you for listening to the Digital Banking Podcast powered by Typhon. Find more episodes on digitalbankingpodcast.com or subscribe on Apple Podcasts or wherever you get your favorite podcasts.